This first one here is I think it's a wonderful example of the kind of gems that we uncover hunting around the world. One of the great investments we made during the pandemic, right at the moment of everyone else being very fearful. And it's a company called Amadeo. And Amadeo is an aircraft leasing company. So they basically own 12 aeroplanes that they lease out to airlines to use all around the world. Obviously, the airline sector was one of those sectors that got really hammered during the pandemic. And when we turned up, the share price for Amadeo had fallen 60 or 70%. A lot of fear out there. Everything to do with airlines was quite worrying. Most of the major airlines either went bankrupt or needed to be bailed out. In our view, however, this is a wonderful example of where the market can kind of throw the baby out with the bathwater. By complete luck, Amedeo had sold 2 of its aeroplanes in February 2020, so 1 month before the pandemic broke. So what that means was they came into the pandemic sitting on this massive pile of cash. When we turned up, when we started buying shares in the company, we were literally buying it below cash backing. So you think about a margin of safety or sort of deep value investing that we do, we're buying this company below the cash on its balance sheet, and we're getting the entire fleet of 12 airlines for free. That was, I guess, probably the easy and obvious part of what was exciting about it. The next part, and where we've done most of our hard work in recent months, has been understanding the dynamics of the leasing market and the companies they've leased to. Most of their planes are leased to Emirates. And Emirates has been a real kind of unique story throughout the airline industry. Whilst most other airlines have defaulted or gone into bankruptcy, Emirates has paid everyone on time and in full throughout the entire pandemic. They let go of like half of their staff, they stopped flying planes, but they kept paying everyone on time and in full. And the reason for that is Emirates is essentially owned by the government of Dubai, which is essentially owned by the Kingdom of the United Arab Emirates, one of the wealthiest families in the world. Vast amounts of oil and gas money. And they have this 20-year view on what they want Dubai to turn into, which is the next New York, travel location, art location, and an important transport hub. And they have very deep pockets. So they made a decision, and that was sort of our assessment from all the work we did, that they were going to stand behind Emirates and make sure that they were one of the good operators and that they came through the pandemic on the other side, able to take advantage of other airlines' problems. What that meant was, as well as buying the company below cash backing, we've been earning nearly a 20% dividend for the year and a half that we've owned it, and we can still see a couple of years ahead of us earning that kind of dividend stream. It's a horrendously complicated story. I'm telling you the highlights. There's other parts of this that are a bit scarier. Those are the parts that we assumed were worth zero, but that really clouded, we think, the market's judgment. And it took a little while for that reason for the market to see what we're seeing. But pleasingly, in the last 6 months, one good example of, actually I'll go on a little aside, good example of where shareholder activism isn't all going in and, dust-ups and, horrible confrontations. We built a wonderful relationship with the board. I speak with the chairman very often. And one of the journeys we took them on was the need to really return the cash on the balance sheet. They didn't need it anymore. Shareholders, with where the share price was, rightfully thought the capital should get returned. And pleasingly, they did that. So they returned all of that cash. That greatly de-risked the investment for us, lowered our entry price. And what that meant is the share price has finally found the fundamentals that we've seen is we've nearly doubled our money on the position. And as you can maybe see on the charts on the right, we can still see nearly doubling again on a very base case, conservative kind of estimate. So if you're a shareholder at GVF today, you own a couple of A380s that are parked in Dubai, and you bought them very, very cheaply.
What I like about this example in particular is the news. I think so many of us have been exposed to the news, often only focusing on the bad parts of a situation and maybe exaggerating that. And what I liked about this was it's often stories like that where things have been exaggerated and everybody's just running for the hills, where somebody with a cool head like Miles, details orientated, can actually get the experts involved, can come in and dissect the company as opposed to kind of digesting what is put out.
It's airline and we don't want to be involved in it.
Yeah, I like that.
We bought a lot of this. We're now by far the largest shareholder, and it's been a terrific kind of outcome, but in the depths of it all, it was a bit scary, I would say.
Yeah.
And look, this next example is a similar sort of theme. Again, we bought this after the pandemic. It really started to establish itself, and what we're doing, every day, but certainly during periods where we get big dislocations in the market, is we're hunting around, turning over a lot of stones, trying to find some little gems. And I
Yeah.
think this is another example of that. Student accommodation, very strange kind of thing, but it's a big industry. It's become a really huge industry in the last decade or so. In countries like Australia, the UK, the US, you have this massive export industry of education. So there's lots of foreign students want to come to Australia or the UK, prestigious universities, wonderful lifestyle, maybe less of a wonderful lifestyle in the UK than Australia, but you get a lot of foreign students coming in. Combine that with the fact there's obviously a lot of domestic students, and one of the interesting things about that is you get this huge demand for dorm rooms. There's a lot of students out there looking for beds. And it's been a really sort of exciting growth industry. There's vast amounts of money that have gone into building dorm rooms across Australia and also the UK. And just to sort of highlight the UK market, the thing that really drives the UK market is there's currently 3 students looking for every 1 dorm room available to rent. That's a lot of kids sleeping on couches and staying with mum and dad. One of the features that was always been really attractive about the student accommodation sector as an investor is the fact that, and if you think about this, the rent cycle is very short. When you lease out a room, it basically lasts for just under 12 months, a couple of semesters, and at the end of that 12 months, everyone moves out and you bring in the next cohort. And that underpinned, asset prices for the sector for a long time. Because there was such a mismatch between supply and demand, every year the owners of these dorm rooms could charge more and more in rent, reflecting the supply-demand mismatch. And one of the reasons why the value of these they're essentially REITs, these real estate assets, has gone up so much in recent years has been the rising rent roll. The pandemic put that to a screeching halt. So one of the challenges the sector faced was, obviously, when you hit the pandemic, everyone stopped coming to school. The foreign students stopped flying in, the domestic students started zooming in from home. And what that meant was suddenly these businesses, their costs don't change, but the revenue line just falls off a cliff. There's no certainty of rent beyond that 1 year cycle. It created a bit of a bloodbath in the industry, in the sector. We started trawling through all the different sorts of assets we could find out there. We came across Empiric, a student accommodation company that we really like in the UK. What we loved about it was we did a lot of stress testing on the balance sheet. We're very confident that this set of assets would come through the pandemic, even in the worst sort of environment. And pleasingly, 6 to 12 months on, a bit like Amadeo, that's starting to be reflected in the share price and fundamentals now. I know the news stories are all about the war at the moment, but in terms of the pandemic, in terms of the UK, student numbers are almost back to where they were, so your revenue line's back to where it was. Share price has had a big run, but is still quite cheap. And one of the things, as I was saying, we think of ourselves as asset traders, so we're not stock pickers, we're buying assets below breakup value, always with the fallback that we can sell the assets to someone else above what we bought them at. And I think this is a great example of that. One of Empiric's big competitors, GCP Living, owned a similar set of dormitories around the country, was bought out by one of the really big private equity firms a few months ago. You can hopefully see on that chart on the bottom there, Empiric is still trading at a 15% discount to book value. So if you broke the company up tomorrow, you'd make 15%. Its competitor was bought out by by Blackstone, and they paid a 10% premium to book value. So just to give you a sense of why we're comfortable owning these things, we pick up a really interesting yield from the company itself, and there's fundamentally a lot of value still within that. That's not value that we're sort of guessing are there or hoping it's there. If necessary, these assets could get sold to
physical properties.
Physical properties get sold to other players, and we pick up the uplift from that. So as well as owning a couple of planes in Dubai, you also own a couple of dorm rooms in Bristol if you're a GDF shareholder today.